Did you know that if you had invested $100 in the Vietnamese stock market in 2001, it would be worth over $1,200 today? That's a whopping 1,200% increase. The world of investing is not limited to Wall Street or Silicon Valley. It's a global playground where savvy investors can uncover hidden gems in unexpected places. Let's take a closer look at an example. Vietnam, a country that 20 years ago was still finding its feet economically. But fast forward to today, and it's a different story. The Vietnamese stock market has blossomed, offering incredible returns for those bold enough to venture into emerging markets. So what's the secret behind such a success story? Well, it's a cocktail of factors. From economic reforms and favorable government policies to a young dynamic workforce and a burgeoning middle class, Vietnam has all the ingredients for a thriving investment landscape. And it's not alone. There are countless other countries around the world, just like Vietnam, waiting for investors to unlock their potential. But how do you access these markets? And why might you want to? Well, the answer lies in diversification. By spreading investments across different countries and regions, you not only gain exposure to a wider range of opportunities, but you also spread your risk. If one market falters, others may thrive, cushioning the blow. Plus, there's the thrill of discovery. The joy of unearthing a promising startup in Buenos Aires or a groundbreaking tech firm in Bangalore. It's like a global treasure hunt, and the prize? High returns and the satisfaction of knowing you've invested in a company that could change the world. But remember, with great potential comes great risk. Each market has its unique challenges, from regulatory hurdles to geopolitical tensions. So, it's crucial to do your homework, understand the local landscape, and make informed decisions. So, are you ready to uncover hidden gems in the global market? Let's dive in. Emerging markets are like the Wild West of the investment world. They're risky, unpredictable, and potentially highly profitable. These rapidly growing economies, from the bustling streets of Beijing to the tech hubs of Bangalore and the thriving industries of Brazil, are becoming hotspots for savvy investors looking to diversify their portfolios and tap into a wealth of opportunity. Let's take a look at China first. Once known for its cheap labor and manufacturing prowess, China has transformed into a technological titan, leading the charge in areas like artificial intelligence and e-commerce. Case in point, Alibaba, the colossal e-commerce giant, reported a whopping 80% year-on-year revenue growth in 2023, a testament to the potential returns an investor can reap from this burgeoning market. Now, let's jet over to India. With a young, tech-savvy population and a rapidly digitizing economy, India presents a fertile ground for tech investments. A case study here is Flipkart, India's homegrown e-commerce platform, which saw its valuation skyrocket from $15 billion in 2021 to a staggering $60 billion by 2023. But as with any investment, it's not all sunshine and rainbows. The road to riches in these markets can often be fraught with risks. Geopolitical factors can have a significant impact on investments. Trade wars, political instability, and regulatory changes can all affect market dynamics and returns. Consider Brazil. While it's rich in natural resources and has a robust agricultural sector, it has also grappled with political scandals and economic volatility, which have kept some investors on their toes. And that's the crux of investing in emerging markets. It's a roller coaster ride that can take you to dizzying heights, but also plunge you into deep valleys. It's not for the faint-hearted, but for those who are willing to brave the risks and volatility, the rewards can be tremendous. As they say, no risk, no reward. But understanding these risks is crucial to successful global investing. Now let's talk about culture. Yes, culture. It's not just about food and festivals. It plays a big role in the way businesses operate, and therefore, in the way you should invest. Culture is a fascinating lens through which to view the world of investing. It's like the hidden DNA of a country's economy, influencing everything from consumer behavior to government policy. Let's take Japan as an example. The Japanese culture places a high value on long-term relationships and loyalty. This translates into business practices where companies often have lifelong employees and close-knit business partnerships. As an investor, understanding this can help you predict the stability and growth of certain Japanese companies. Now let's hop over to Latin America. Many Latin American cultures have a more relaxed view of time compared to their North American or European counterparts. This manana, or tomorrow attitude, can sometimes translate into slower decision-making processes in businesses. This isn't necessarily a negative thing, but it's definitely something to keep in mind when expecting quick returns on your investments. But it's not just about understanding culture, it's about leveraging it. Take China's tea culture, for instance. The country's millennia-old tradition of tea drinking has led to a booming market for high-end teas. Savvy investors who recognize this cultural trend early on have reaped substantial profits from it. And let's not forget about cultural shifts. Today, we're seeing a global cultural shift towards sustainability and green energy. Countries like Denmark and Germany are leading the charge with their high adoption rates of renewable energy sources. Companies that align with this shift present promising investment opportunities. However, it's crucial to remember that culture is not the be-all and end-all. It's just one piece of the puzzle. Economic indicators, political climate, and technological advancements are also key factors to consider in global investing. So remember, when investing globally, you're not just buying stocks or bonds, you're buying into a culture. So, where is global investing heading? Well, with the rise of technology and ease of access to information, the world is becoming a smaller place. In the past, global investing was a game largely played by the big boys, multinational corporations, seasoned investors, and investment banks. But now, with the advent of technology, everyone can be a global player. The internet, smartphones, and trading apps have made it possible for anyone, anywhere, to get a piece of the global investment pie. We're talking about a future where geographical boundaries are becoming less relevant. You could be sipping a cup of coffee in New York and investing in a tech startup in Bangalore, or you could be in Sydney, buying shares in a green energy company in Copenhagen. The possibilities are endless. But what does this mean for you as an investor? It means a world of opportunities waiting to be explored. Emerging markets are showing significant growth potential. Clean energy, artificial intelligence, and biotechnology are just some of the sectors that are expected to boom in the next decade. Investments in these areas could yield substantial returns. However, this ease of access also presents certain risks. As the world becomes more interconnected, we become more vulnerable to global economic shifts. A recession in one country can send ripples across the globe, affecting your investments. Plus, with an overload of information, it becomes even more crucial to filter out the noise and make informed decisions. That's where the importance of research and due diligence comes in. In this new era of global investing, knowledge truly is power. Understanding the economic landscape, political stability, and cultural factors of the country you're investing in is paramount. The future of global investing is here, and it's exciting. It's a world where anyone can participate, where the playing field is being leveled, and where the opportunities are as diverse as they are abundant. But remember one thing, the world of global investing is vast and full of opportunities. But remember, with great potential comes great responsibility. Always do your homework. So, we've taken a whirlwind tour of global investing, from the bustling markets of Vietnam to the cultural nuances of doing business in India. We've seen how emerging markets are rising, offering a fresh canvas for investors. We've understood the impact of cultural and geopolitical factors, how they can potentially make or break an investment. We've also peered into the future of global investing, where technology and innovation are reshaping the landscape, and the traditional strategies are being challenged. We've emphasized the importance of due diligence, understanding the risks, and the potential rewards that come with exploring uncharted territories. Global investing is not just about diversifying your portfolio. It's about embracing the world, its cultures, its challenges, and its opportunities. It's about becoming a global citizen. Remember, the world is full of investment opportunities. You just need to know where to look. Happy investing!